Welcome to my weekly review. Today is Saturday, July 27th, and you're looking at a daily chart of the Nasdaq, which is in a correction mode after, a strong rally from April 19th. It peaked out here at 18,000. Let me dial in here, 18,671 on July 11th. And since that high, it's corrected 9% from peak to trough here at 17,033 on Thursday. That may be, the low. It might be a temporary low. You just got to take it one day at a time, but it's obvious that there's a rotation going on out of the mega cap tech stocks and into small and mid cap stocks. I'm going to get to that in a moment, but just wanted to acknowledge the weakness of the Nasdaq. And after, I believe it was a 3-month rally, from April 19th up to July 11th, July 11th, we had a 3-month rally, and now it's in correction mode. How low will it go? How long will it last? Nobody knows, but the market will force you, to make decisions, and you have to know who you are as a trader. Are you a day trader? Are you a swing trader? Or are you just an investor who's going to stay with NVIDIA and Microsoft and Apple and ride out this downtrend? I cannot handle downtrend, so I am a swing trader, and I don't have the hustle to day trade all the time. So I like to swing trade, and so I swung over to the home builders, the financials, insurance, some drugs, and I'm going to get to that in a minute. The healthcare group as well. But you can see the Nasdaq was down 2% last week, and a lot of stocks were down. The growth stocks were down a lot more than that, 4 to 6 or even more. And for the month, the Nasdaq, the month of July is seasonally a strong month, but it's down more than 2% in the month of July. So it's been a pretty rough month. And like I said, there's just a rotation into the smaller names. So I'm going to go to the smaller names. With the Nasdaq, when it gapped down on this day, I was going to go to the Russell 2000. I'm just going to say that when it gaps down like this, the one day it was down 2.77% on the 17th. The next day it has to get back up into this gap and retrace half of those gains. But it didn't. It went the other way, and that was an indication, where it sliced to 21, that it wanted to, go lower. We had this oversold bounce on Monday, and people got excited, but it was rejected at its moving average. Sliced the 50 on Wednesday, followed through to the downside on Thursday, and just had an inside day, a dead cat bounce on Friday. It looked like just short covering, on lower volume. I wouldn't read too much into Friday's action with the Nasdaq, because the action is with the IWM, the Russell 2000, and the small cap stocks. I mean, I like to play the TNA because it moves faster. But you could see, if you go back to a weekly chart, this thing has done nothing for a long time. And so people are skeptical that it's going to do anything this time. But it looks like, to me, like it broke out here 3 weeks ago. This week here, the breakout, it was up 6%. That's a nice breakout. An index up 6% in a week. Followed through 2 weeks ago, 1.74%, and the last week was up 3.4%. So this IWM, the Russell 2000, has some strength, some power, and I think it can continue. The trend will continue. That's my expectation. Anything can happen. You always have to be flexible and open-minded. Anything can happen in the stock market, and usually does. But this is the index that I like to trade. I mentioned TNA, so I might as well show it. It was up 10% last week. We'll take 10%. Great to play with options. It's very liquid. 2 weeks ago, it was up, 3 weeks ago, it was up 18.5%. 2 weeks ago, it was up 4.5%. Last week, 10%. So this thing is really moving with power. Just like the IWM, it hasn't done anything for a long time, but I mean, if it got back to these prices, we'd be very happy, right? Over $100. I would take a double in the index anytime. So anyway, that's a great trading vehicle. And since I'm on the small and mid caps, I got to go to the mid caps. They're being bought as well. This one looks, well, let me go back to the IWM. Sorry. I just wanted to point out that it is a little extended here, 4.7% above that 21 and 8.3% above this 50, but they're just starting to break out. This RS line is pointing due north, and this thing hasn't made a higher prices yet. So the RS line is making new highs before the stock or the ETF is. So the high here on IWM is 226. It closed 224. So I would look for new highs next week. Anyway, wanted to point that out. The MDY, same thing. The RS line, not making a new high, but definitely pointing north. And this thing to me is near a buy point at 558. If anybody's interested in mid-cap stocks, this one's only 3.6% above its 50 and 1.5% above the 10. So it's a little closer to the moving averages. MDY is definitely strong exchange traded fund. There you can see it's just starting to break out. 2 weeks ago, made that high. What was this, 569, and pulled back 570 essentially. And then last week it only got up to 562. So you're looking for it to take out that 570 area on the MDY. All right. I guess I'll go to the Mag 7 stocks just out of a perfunctory routine here. This is Apple. It's one of the few of the Mag 7 that's still above the 50. This is probably considered a flight to safety. They haven't reported earnings yet, and if it's anything like Google or Tesla, earnings is not going to be something to look forward to. But we'll see. They report August 1st, which is what, Thursday. Microsoft, this thing is looking a little radioactive here. Broke out and ran up to the 468, now sliced its 50, like the Nasdaq. Looks very similar to the Nasdaq. Meta Platforms. Oh, by the way, Microsoft reports the 30th, which is Tuesday. This is going to be a big week for earnings. Meta Platforms, they report Wednesday. So you get Microsoft, Meta, and Apple. Going to be a busy week this week. We'll see what happens. This one sliced its 50. Then it took 5 or 6 days to, toggle back up here to the 50 just to get rejected. It got the Motambo treatment and then got slammed Wednesday and Thursday. Little dead cat bounce on Friday, but we'll see what they have to say next week. Amazon, kind of similar action here. Sliced to 50, tried to trade up, got rejected. The Motambo treatment Wednesday and Thursday, very similar to Faceplant. And this is earnings due on the 1st with Apple, which is Thursday. So, like I said, it's going to be a really busy week. Google reported earlier in the week and no dice. It was rejected. The report wasn't that bad. I mean, they had 14% sales growth, 35% earnings growth, but their ad revenue is slipping, and the YouTube numbers were not up to snuff. So, any reason to sell? I mean, I think it's just buy the rumor, sell the news type of thing. I don't know how long this trend is going to last, but it got a little crowded in the mega cap tech. They were, big winners for a long time. People were sitting in them, fat and happy, and now they're getting sold a little bit. So makes you a little uncomfortable. Like I say, it's forced you to make decisions. Are you a long-term investor, just going to hold on? That's fine. If you can't stand drawdowns, then you swing over to the stuff that's working. I'm going to get to that in a minute. One thing that I don't know what's going on here. Tesla is above its 50, and their report was awful. I'm sorry. There's no growth here. It's a car company. I know the CEO is trying to pivot to an energy, and a robot and then self-driving, but that's a ways away. It's pie in the sky stuff. We got to deal with reality, and reality is their margins are being hurt by, their pricing. There's just no growth here. I think it's due for a more of a haircut below the 50. I would not touch this at all. But somebody's buying it. Somebody likes it because it's doing better than all the other Mag 7 is not named Apple. So anyway, Tesla, last week it was down 8%. So it got a little bit of a haircut there. It's been down the last 3 weeks. But look at this earnings line. It's heading just due south. That's not my style at all. You got to have some earnings growth there. All right. Anyway, NVIDIA, the last of the Mag 7s. Oh, there's a lot of people, pontificating about NVIDIA where, it's done, it's peaked. you know, let's just take it one day at a time. It broke out, ran up, formed a base, broke out, ran up to that 140 level. Now it's sliced at 50, got slammed on Wednesday and Thursday, and had that dead cat bounce on Friday of what, 78 cents. They're going to report August 28th. So, and I don't expect much until then. I know people are saying it's done. It's going down to the 200. I don't know. Just take it one day at a time. I just wouldn't, I wouldn't own this. I did own it, of course, but I had to sell on the weakness because like I said, I can't take it down. And I know a lot of people do. They're just sitting in Nvidia. They're going to be rich in 5 years, and that's fine. I can buy it back. I don't know how low it's going to go. I don't know how long it's going to last. And if it starts acting better, I can just buy it back. And that's the beauty of being a retail trader, is that you can go in and out, as opposed to, big institutions that, their footprints are all over, these stocks when they're buying and selling, and they can't move as quickly. All right, I'm gonna forget all that. I'm gonna go to earnings because it's earnings season and we're seeing a lot of good earnings. I'm gonna go start off with the defense group, and this is Lockheed Martin. We spend a lot of money on defense in this country, and it would stand to reason that these companies would be doing well, and they are. And Lockheed Martin broke out. What day was this? The 23rd. That's Tuesday. Nearly 6%, just kept following through. I noted to our folks at MC Stock Charts that when you see this thing break out and close it, 97% of its daily range, that's usually an indication that there's going to be more buyers coming in. They're not done. That nice close on Tuesday followed through on Wednesday. While the Nasdaq was selling off, it was powering up another 2.7%. Thursday, 1.2%, and then on Friday, more gains. So I like it when stocks go higher. So that's my kind of stock. I wouldn't be buying it now because it's extended from that 10. It's 5.7% above the 10. So let it go sideways, let the moving averages catch up. But you can see that RS line just powering higher. Lockheed Martin, it's a weekly review. We'll take a look at the weekly chart, and that, my friends, is a breakout, from a stage one base up by 10.5%. That's a fantastic move. 125 billion market cap company. So Lockheed reported, Raytheon or RTX reported. Once again, this looks pretty similar, breakout, up 10.8%. I mean, we'll take that all day long. So you can call me a front runner, you can call me whatever, but I like to trade trends. I like to trade strength. So Raytheon powered up 8.2% on Thursday, followed through with a little gain on Friday. And then I like strength, and you could see the RS line, pointing due north. It's got that little blue dot there. And the other one was GE that reported. And I did buy GE. I told our folks at MC Stock Charts that the trade was from, like 160 here on Wednesday or Thursday up to 170. And that's exactly what it did, 161 to 172. And that's the trade for me. I got out. But to me, it's still setting up in this base here. If we take a look at the weekly chart, you can see this consolidation, flat base, standard paint by numbers buy area is $170. So it's trading right around there. I just got out because it's the weekend. It was a nice trade. I made $10 in the trade. And if you trade with size, that can be a nice little chunk of change for you. FTAI, they report this week. Another one of these aerospace defense names. They're reporting, they reported last week. Oops. They had a nice response. Yeah, 7%. I think they reported Thursday evening or Friday morning. So yeah, the aerospace and defense, this group is on fire. You know what I was thinking of, because I had this on our ready list, I'm gonna have to take it off, is ERJ. They report August 8th. So it has this double bottom base, just trading sideways, essentially finding support at the 50 here. Now, it hasn't reported earnings yet. Will it do something like we saw with FTAI and GE? I don't know. And Lockheed Martin, we're just gonna have to wait and find out. But this is looking pretty good. I don't like to go big into earnings because it's a good way to get burned. And I'm going to show you some of that in a minute here. All right, some other companies reporting earnings last week that just killed it was Tenet Healthcare. This is a medical hospital stock. You can see the group is really coming on strong. It's now 15, but you can see this consolidation, flat base pattern. bounced on Wednesday, 4.8%. We could see this better on a weekly, perhaps a little flat base pattern and then the breakout, nearly a 14% move last week. We'll take that every week. Thank you very much. ServiceNow, a software name. Software is hit and miss right now. There's some that are really getting pummeled and others that are doing well. ServiceNow, to me, this is still actionable near that, paint by numbers buy point. Let's take a look at the week. This is a weekly review, and you could see the, the earnings, gradual earnings growth. That's what you want to see. Consolidating within a base, bounced off this moving average here. Yeah, it's 750. It traded down to 729. So that's your 40-week line, huh? Yeah. Yeah, what was it? 40-week line, 729. 64 and it traded down to 729.23. So that's almost exact to the 40-week line, which is his black line here. And it, kind of coincides with the 200. Not really, though. You can see the 200 there is 714 and it only made it down to 729. But still, that's in the past. We got to live in the future. And here it had this nice breakout and just had an inside day on Friday. ServiceNow still looks good to me and actionable at that level. COLB, this is one that I put on for our folks at MC Stock Charts. Just, I bought it small heading into earnings. I don't want to get too crazy, but this whole group is just, it's like shooting fish in a barrel. They're just buying these things and they're going up. Small cap, 5 billion market cap. Nice cup with handle pattern and broke out, 11.5%. We'll take that. Thank you very much. Every week, it was up nearly 16% for the week. So I am still holding this one. The earnings weren't great, but you know what? It's still in this base here. Hasn't really even broke out yet. And that's why I kept holding on to it. You can see the earnings, these are kind of like the, the rates are coming down. There's an expectation of rates coming down. So a lot of these rate sensitive names are getting, bought up. This is RPM, it's a chemical company. They reported earnings and had a really surprising move here, nearly 7%. I'm going to do a video on the gappers and after earnings season is over. And MMM is certainly one of them. This one broke out, classic breakout from a base, moved 23%, with massive volume, got that blue dot there. 3M, you got to like that action, the price action, super strong, could be the start of a real big move for a big company. It's only 70 billion market cap now. It was a lot bigger, but you could see how it's really been punished and sold off, breaking out of a stage 1 base here. So that looks good. All right. That's it for the earnings. Nope, I lied. I've got to show you the bad stuff too. Dexcom reported earnings, sold off to the tune of 40%. 40%, people. That's why I can't go big into earnings, because if you have size, 10%, full position, and you lose 40%, that's quite a hit to your portfolio. I believe, Dexcom's diabetes, medical product company, and I believe GLP-1 is probably impacting their company now. The CEO said no earlier, but I gotta believe the weight loss drugs are hitting the food, the beverage, and these diabetes medical products. So if you own Dexcom or some of these other names in the group, no, not these ones. Okay. Anyway, Dexcom, you can see that. So I'm sorry if you own that stock. That really hurts. I've been there and done that, and it really stinks. So I'm just got to show you, the earnings, both sides of the earnings game. Showed you the winners. Here's a loser. A line on Thursday came down in this volume. This is this braces, the clear braces. Yeah, it was down nearly 8% that day, 2, 8. This keep piling on 10%. Okay, so it had a rough week for a line, a medical product stock down 12, nearly 13%. Yeah, it hurts. EW, Edwards Life Sciences. I didn't read the report, but it was down 28% last week. That's a heck of a haircut. Tough to take. Little dead cat bounce on Friday. Probably some short covering. So congrats to the shorts and sorry for the longs. That really stinks. Ford, I don't know what to make of Ford. Ford, Tesla, GM, they're kind of struggling. Very little growth, no earnings growth. Down 18% on an earnings call. It really wasn't that bad, but I don't know. Sliced every moving average possible. So anyway, I'm going to move on because I'm going to get to these themes, these groups that are moving, go to something a little more positive. Stocks are like pack animals, or like dogs, and they move in packs. And one pack that is working for us are the home builders. This is Lennar double bottom base here. It's trying to break out, trying to push away from this base on the daily chart. I like to look at the weeklies, and you can see it's consolidating in this double bottom base. It's got that 171 paint by numbers buy point. It's trading just slightly above there. I think this is still actionable. They don't report earnings till September. That's behind us now. So anyway, Lennar looks fantastic. KBH already broke out. You could kind of say it's one of the leaders of this pack of wild animals. Broke out, pulled back to its 10, and then what happened? It found support and bounced higher. That's what you want to see if you're a trend trader. Just surf those moving averages, brother. And as long as those moving averages are trading higher and it stays above the moving averages, you're making money. So there's nothing to do there but count your chips. But don't count while you're sitting at the table. You got to count them when the dealing's done. All right. DHI, this is the largest of the home builders. They reported, breakout of a double bottom base. Looks a little like Lennar, a little bit ahead of Lennar, but once again, the moving averages heading north. And as long as they stay above those moving averages, making higher highs and higher lows, you're making money. So we like making money. NVR is one of these, I think it's like, talk about needing a stock split. 8,600, okay. Broke out of this base, trending higher. They have, 20,000 volume daily, right? But 26 billion market cap is not a small company, and it has less than 3 million shares in its float. And there you can see this consolidation here, the flat base and the breakout. That's the thing of beauty here with these home builders. We like strength, and they're showing us strength here. So the institutions are buying the home builders. I know they're rate sensitive, and if Powell says something stupid this week, these are probably going to get hammered. So you always have to be mindful of that with these rate sensitive stocks. This is Green Brick. They're home builders in the South predominantly, and 14-week consolidation breaking out here week after week, right? We like that. 20% move, 11% move, 5% move, yeah, every week. So there's your breakout. There's your trend higher, higher highs, higher lows. Let the moving averages trade higher, and that's it. That's an uptrend. That's the definition of an uptrend. Okay. MTH trying to break out and then pulled back to its moving average, found support and bounced nearly 4% on Friday. Meritage Homes. That's a weird looking cup shape. Came down to its 40 week line and just bounced. So straight from the bottom, probably needs a little bit of time. Yeah, it's straight from 152 to what 205, whatever. Okay. Yeah, that's probably going to need some time. That's my line whenever stock's not doing well. Oh, it needs more time. All right. Enough with the home builders. I could do this all day with the home builders. I'm going to move on to the medical managed care stocks, which is, long-term care. To me, this is the sick baby boomers that are dying off. I shouldn't laugh. I'm a boomer. It happens to everybody. People putting their parents in old folks' homes and stuff like that. So it happens. So let's try to make some money off it. This is Sonaida Senior Living. Gapped higher here, didn't it? Yeah, 60% in a week, followed up with a 40%. Now it's formed this little double bottom base. To me, this looks actionable. To me, at maybe $33. I wouldn't wait till it got way up. And yeah, I wouldn't wait. This thing is, for the year, it's up phenomenal amount. It's the leader of this group, and the other one that's doing well is Pennant Group, PNTG. You can see it's one of the top groups. It's ranked number 2. This one's already broken out and running. This is a trend trader's stock here. at this point, just moving with its moving averages here. And you can see the earnings line heading north, the stock's heading north. Funny how that happens. BKD is another one in the group. This one, cup-shaped pattern, broke out, and now it looks like it's a little extended here. Brookdale, yeah, that's a little extended. I know it's an $8 stock, but I'm just showing you. I'm just saying this is what's moving. Okay, it's one of the top groups, and this is Ensign Group. Broke out of a base, pulled back to a moving average, found support, bounced 5%. That's the type of bounce we want to see. And you can see that earnings are just gradually going higher. There's the cup-shaped pattern and the breakout. So I'm gonna get off that group. It's a little morbid, but if you want to make money, somebody's buying that. This is a medical hospital group. Tenet Healthcare, I already went over this, I believe. Yeah, I think I did. They broke out of a base and running higher. Yeah, I know I did. This is one of the earnings play from last week. You could see that breakout up 14% last week. But there's others in the group. Like I say, these stocks are trading in groups, like a bunch of pack animals. This is HCA Healthcare, medical hospital group. Top 15, we'll take that. Just consolidating in a base, it traded below its 50. And that's why I say, just because your stock trades below the 50, like NVIDIA did, you still keep watching it because it could stay there for a little while and then boom, rally right back through. This one looks pretty good. HCA Healthcare. Taking a look at the weekly here, and you can see that earnings line just gradually trending higher. SGRY Surgery Partners. We saw Intuitive Surgical last week report, and they had a phenomenal quarter. I didn't include them, I should have, but this one looks to be breaking above a downtrend line. And yeah, it hits on 3 more points. This one's hitting on like 5 on Friday, 4%. So nice move. I would say that's actionable right now. SGRY. And the last one is SEM, small cap stock, 5 billion market cap. This one already broke out, getting extended. So weekly review, I got to take a look at the weekly chart. You could see the consolidation, like this thing's going nowhere for years. And all of a sudden it wants to move higher. Okay, so the medical hospital group is doing well. I have to go to the banking stocks because the banking stocks are just out of control. This is JP Morgan on the weekly. You can see the breakout there. And, the RS line here, it's hitting new highs before the stock is hitting new highs. So that's something to be mindful of. JP Morgan looks pretty good. Blackstone, another one of these big market cap, 100 billion market cap stocks, trying to break out, pull back to the moving average, found support. Just there's your breakout. I said this is still actionable, I guess, on pullbacks to moving averages. And its RS line is heading due north, making new highs before the stock makes new highs. So yeah, I'd say that's still actionable there. I would expect it to make another high is my point. I'm going to get to the smaller names because I did say the smaller names are doing well. COLB, I pointed this one out earlier on the earnings call. I bought that one. I bought HBAN. They had earnings and just ripping higher. Now consolidating, kind of straight up from the bottom here, and now consolidating, allowing the moving averages to catch up. You take a look at the weekly chart, you can see that straight up from the bottom action. So probably going to go sideways. It was downgraded on Friday and still eked out a gain. So that tells you how strong these things are. First Horizon, long consolidation period, base after base. Tried to break out, then pull back to the moving average, found support. So this one looks good as well. I would say that this one's still actionable. SF, Stifle, another one of these, below 10 billion market cap, consolidated in a base, broke out, pull back to the moving average, broke out, pull back to the 50, now breaking out once again. Take a look at the weekly, it's up 6% last week. It looks to me like it wants higher prices as well. WAFD is another one that we had on our listed MC stock charts, and this thing straight up from the bottom. Just tremendous strength in these names. Less than 3 billion market cap. There you see it on the daily, straight from the bottom, 25 up past 35. Just give it some time for the moving averages to catch up, but you can see the RS line heading due north. Very strong stock there. That's WAFAD. CUBI is another one. I could do this all day. I'm not going to do this to you though. This will be my last one of the bank stock. Customers Bank Corp, and this one broke out and went sideways a little bit, and then on Friday had other plans. It was up 4% on Friday, and up 8% for the week. So the banks are strong. The home builders are strong. The medical, managed care group is strong. The hospitals are strong, and I got to go to the drugs. TGTX. I like the way this one's setting up in this base here. Why? Well, it's a stage 1 base. I got to go to the weekly. It's sold off hard. Look at that. And now it's forming this little stage 1 base, cup-shaped pattern, needs a little handle. And the last couple of weeks is trying to form this handle. So let it pull back a little more. And I think with earnings, you're going to have to hold it through earnings before this thing blasts off. But it moves fast. And that is going to be on my ready list as well. That one looks good to me. But like I say, you got to hold it through earnings. And anything can happen. They can bomb on earnings. So that's the risk you got to take. It's a risk reward deal. Viking, they let me see, what was the deal with Viking? Oh, they skipped phase 2 trial. They're going straight to phase 3 with their oral weight loss pill. I mean, they're still a long ways from, let's face it, folks, you got to go through a whole trial. It takes money to, you got an NDA, you got to file with the feds. The feds have not been that friendly, if you haven't noticed, but it did break above this little downtrend line. Good luck to Viking. I own it small, but I own TGX and Viking, very small, because I can't tolerate the way these things trade. And they're risky, they're high risk. This has no earnings or sales at all. So they're really counting on Bry out here. I think the CEO just wants to be taken out. So we'll see what happens with that one. Oh, CORT, another strong. I'm just observing, showing you strength here with this one does have sales and earnings. You can see the sales growth, 14, 21, 31, 39, and the earnings growth. Come on, 79%. Thank you very much. That's Corcept. Therapeutics, this is still, I think, actionable here in this base. It's been going sideways for a long time, though, so eventually Corcept will break out. MIRM, speaking of breakouts, this one already has heading north, higher prices. Thank you very much. This is MIRM Pharmaceuticals. There you can see that base and the breakout. So breakouts are working, and this is a strong bull market, and we're just seeing rotation, constant rotation, out of one group into others. I'm just showing you right now some of the groups that are doing well. The insurance is another one. This is Bro, love the ticker symbol. Yeah, it was up 7.2% last week, broke out of the base, trading higher, earnings line higher. That's what you want to see. That's what I want to see. I like the fundamentals with the technicals. This is Gallagher trading higher, earnings line higher, stock higher. It got a double upgrade, I believe, on Thursday. You could see the breakout, the pullback to the 21, support at the 21. Gallagher looks really strong as well. Jackson, this is another one that I bought. Just switching out of tech and into insurance and drugs and and banks and home builders. I'm just a trend trader. What can I say? I just go with the flow. This is Jackson. We had it on a ready list back here when it was trading tight within the base, pulled back to the 50 and broke out, but I took it off. I think it's a little extended here, but it'll probably go higher highs, higher lows. Jackson looks fantastic. SKWD, this is what I'm going to put on this week, I believe, because I like the pullback here. It's just consolidating within this base, tried to break out, now pull back to the 21. I kind of like that action right there. I like pullbacks too. You don't have to go chasing everything in sight. TRUP, this one just consolidating in a base. I like this one as well. You can see the earnings line heading due north, which I like, and it's just consolidating in this stage 1 base. So those are two that I'm going to put on this week. And then I got to go to Aflac, the duck. Anyway, it broke out and is running higher. It's a weekly review, so I got to show the weekly chart. up 2% last week. Thank you very much. All right, that's enough. I know I showed you all those groups that are working. I showed you the earnings stuff. I showed you the transition from, the Nasdaq to the small and mid cap. That's what's going on in the market. So thank you for watching. That's it for me, except for I lie. I have one more thing. And that is, in honor of the great Steve Jobs, I've got to explain, the Deckers phenomenon. This stock was 25% off its high. It made a high and then sold off 7 weeks in a row. Why? The analyst said that because Nike was failing, they thought Deckers was failing, going to have problems. And that does not make any sense to me at all. It's still, nearly 20% off its high, pulled back to its 40-week line there. And if Nike is losing market share, I get it. The consumer's slowing. We're not spending as much money. We're balking. Inflation's eating our, wallets. But people are still buying shoes, and they're buying Deckers. They're buying direct to consumer. So Deckers doesn't have as many stores as some of these other like Skechers and Crocs. They like to, you go to their website and buy them straight because you have to hire people to sell in stores. You have to rent space, so it's costly. These companies are all going direct to consumer, and you can see this one was up only 2-something% last week. I'm very disappointed with the Friday move. Technically, it traded down to the 200, whatever, the 40-week line, like I said, and then it bounced up to its 50 and got rejected there like Matambo. And it closed at 2% of its daily range. That is not what you want to see on a breakout attempt here. So Deckers to me is still, I think the CEO is retiring, Dave Powers. He's 54 years old. Why would a 54-year-old retire? Maybe Hoka and Nugs have hit peak sales. I don't know. We're going to wait and see. It's going to take another quarter or two to find out. They're going to split their stock on September 17th, 6-for-1. But because Nike is failing, Deckers got sold. So that's what I'm talking about with this pack mentality. Like they just sell everything. They sold Crocs too. Crocs reports this week. I bet you Crocs reports a good quarter. Crocs is doing really well, and it's saturated in the USA, but doing really well in the People's Republic of China. And I think they're gonna surprise and talk about a share buyback program too. So I'm going to buy a little Crocs into the earnings. It could sell off. They could bomb. It could trade below its 200. Of course it can. But I'd like the risk reward there. I think they're doing better. And I think the shoes have just been sold off because of Nike. This is a top 5 group, 6-7 weeks ago. Now it's 115. So I think it's just overdone. The analysts even admitted that the Nike debacle affected their thinking on Deckers. Deckers reported just boffo quarter, man. 88% earnings growth, 22% sales growth. You could see the accelerating sales growth here. 16, 21, now 22. Got nice margins. This has got everything you want in the stock except for it's below its 50. So something's wrong here. They said they're gonna earn $31 next year. They're gonna split 6-for-1. And I would think it would, I just got to go to the monthly here because I know past performance doesn't guarantee future results, but this has been one of the top performing stocks, including Nvidia, including Monster, of this century. So Deckers, if you just bought it in 2000, like I didn't, and just held on to it, you'd be a rich person. But like I said, past performance does not guarantee future results. I just think that it's going to trade, eventually it's going to trade through its moving averages and make new highs eventually. I'm not saying when. So if you're a longer term investor and can tolerate some of this volatility, I think it'll be fine. I think their new CEO will do fine as well. Anyway, I just wanted to point out, sometimes you got to use your brain and your guts in investing, and they botched it. They admitted that they looked at Nike and said everything sucks and we're going to sell everything shoe related, and they blew it. So Hoka and on holdings ON, excuse me. They're going to report here pretty soon. They're taking market share from Nike, and that's Nike's problem. The CEO of Nike owns 97% of that company, and he's interested in paying high school football players to build a championship football team at Oregon, and he can do whatever he wants with his money, and he donates a lot of money. He's a good person, Phil Knight, but I don't think he's hungry for the company anymore, and the people running it are pretty much incompetent, which brings me to the next one, Starbucks. I think they're worse than Nike, and there's somebody's taking market share from them. They're losing it just like Nike is. And the retail restaurant stocks were hot for a while, but they're cold now because the consumer's slowing. So they just sell everything. But one company I think is doing well. According to all, anecdotal evidence, this is Bros. They're going to report on the 7th. I think they're blown out of the water. Some people say it's a fad. I don't think it's a fad, and I just think they're taking market share from Starbucks. It's a six billion market cap, so it's right there in that wheelhouse of, what's hot right now and what they're buying. But it's below its 50. It's got to trade through it, and that's what I'm looking for with Dutch Bros. Definitely taking market share from Starbucks. And the last one that's got me, you can make money from, you can be an opportunist and make money from these analysts blowing it and just botching an institution selling these things for no reason. This is ELF, well, it's 18% off of its high. Was much more, it was like 25% off its high with no news, just this lost 25% of its market cap. It traded down near its 40-week line last week. What was this, 161 or something, 164, and then retested that 164 level, 165, and then bounced on Friday, 7%, but it was 25% off its high. Why? Well, Estee Lauder's not doing well. Ulta Beauty continues to lower guidance because Elf's taking market share from Estee Lauder, and they don't have the same business model as Ulta, which is just one of these big box stores that sells a bunch of cosmetics. These guys are direct to consumer. They sell on Twitch, Roblox, and to me, if you just look at these bases here, form this base, it broke out. Here's a 2-week candle. It had the 3 weeks tight, then broke down to its moving average, then ran higher. This is a little bigger base, a little longer base, a little wider and looser base, but that is a nice shakeout down there to 168, and then last week down to that 164.55. Yeah, this could be, in Weinstein's philosophy, the stage 1, the stage 2. This could be the stage 3 before that stage 4 decline. It could be. You got to keep an open mind and be flexible, but it could also report blowout earnings and make new highs. So, like I said, Ulta Beauty has been bombing, and so ELF is getting sold off with this. These guys have just blown it. And Estee Lauder, they're having trouble in the People's Republic of China as well. Their most recent report was a little better, but still, trying to form a bottom. And I think ELF Beauty is taking market share. Anyway, Deckers, ELF, Bros, and even CROX, I think, are going to do well. Anyway, that's it for me. Thank you for watching. This time for real, mcstockcharts.com, over and out. Thank you for watching my weekly review. Never give up.